Hello, guys. So, okay, welcome back. Just to quickly kind of jump straight into this here. I'm listening. We got the Fed. So Jerome Powell has just spoken about what he kind of thinks the plan is going to be. So far, we don't really see too many changes. He has said that they feel that they are pretty well equipped. Just to give you a bit of background idea, have a look at this here. So this is the in the United States, the overview, what happened just now. In the United States, the authority to set interest rates is divided between the Board of Governors, which is the board, and the FOMC, Federal Open Market Committee. The board decides on changes in discount rates after recommendations submitted by one or more of the regional Federal Reserve's bank. FOMC decides on open market operations, including the desired levels of central bank money. So basically, what this is kind of like, what does Jerome Powell think, and how is that going to influence the people in the board? So let's have a quick look. AJ, bring up the price of Bitcoin here. Let's have a quick look at that.
Yes.
Let's see where some of the movement is.
So just looking at the chart, we are seeing a little bit of this morning. We are seeing a little bit of a pump in the price. So so far we've seen sort of a 2.5% move in the price this morning. But yeah, like I said yesterday, we were in this wedge here. We did break to the downside, and I was warning everyone about that initial downside for Bitcoin and Ethereum, and exactly what I thought is playing out as of right now. We're seeing those pullbacks, and on the 4 hours, well, I warned you about the bearish divergence that is playing out as well.
Yeah. Okay. So also, just want to quickly, I'm going to keep jumping in here as the information comes in. Currently, there's a little bit of movement to the downside across the general markets. So Powell, the kind of key takeaway here is they say they have a very strong economy positioned to handle tighter policy. So if they think that the economy is strong, then obviously that means they feel as though they are able to implement tighter monetary policy, which in fact is actually quite bad for us in the markets, because this includes higher interest rate hikes. And so that's kind of putting tech under pressure. Can you bring up the QQQ or the US 100? Obviously, both the NASDAQ.
So the NASDAQ this morning, we're seeing a little bit of a pullback. Let me just see if I can find the USQ.
Little bit of movement to the downside. Just quickly to give you a recap. Here we go. 1 second.
US Tech. Here we go on the screen.
So they can handle tighter policy, like we said just now. Unknown hikes are appropriate, but the key commentary that we're kind of getting here. 1 second. The Fed is strongly committed to handling inflation and keeping it under 3%. But the question is, like, when? How long is it going to take to get there? So currently we're around obviously 8.6%, which is not great. He's currently giving his testimony, but this is initially not looking too good for the markets, saying that the economy is very strong. That means they're going to tighten much more intensely, which obviously is going to be bad for us and kind of raising the interest rates. There currently is let me share my screen, the Fed rate monitor. Here we go. So we can have a look at what the anticipation of the rates are for the Fed. Okay, the screen is being shared. Give me 1 second. Come on, my internet's fast, isn't it?
Just whilst that's loading, is it loaded? There we go. Okay.
Yes. Yeah, it is. So this is kind of looking at what we're seeing now. Is there's a jump. So yesterday there was around a 2%, thought that we would have a 25 basis point hike. Now that's 9%. So this could be good for the market. I think, there's two things to consider here, guys, because if we do have a rate hike now that kind of strangles the market, that's, initially very bad. But then it begins to, I guess, make the market open up, because then we have more confidence that over the long term, we're not going to be in a recession, and we will actually end up with a good market. So people think, okay, well, I'll move into more risky assets. But if now we start becoming very relaxed on monetary policy and actually start kind of reducing the rate hikes, that then makes everyone think, oh, that's amazing short term, but longer term, we have a higher chance of being in a recession. And that was kind of where we'll see people moving away from the risky assets like tech, for example, because if they're thinking long term, they might as well move into something, get a dividend for a while, because they're anticipating a recession. So that's then moving people into safer stocks, which obviously is away from our space of crypto and also the tech assets.
Yeah,
just want to drop that in there. So yeah, and I'll keep you up to date with this as we see this kind of progress. So yeah, this level here, we're seeing these changes. Obviously, a massive jump. It seems as though before this meeting, people felt relatively confident, I guess, that we would have a 75 basis point hike. No, sorry, this is the 50. This is the 50. So currently 1.75. So this would be a 50 basis point hike in June, was anticipated. Now it seems that sentiment is slightly changing, could be a 25. I don't know how this is going to change. So tomorrow we'll come back on and we'll have a look and see what the overall market is thinking. But that's going to kind of give us an overview as to how we're going to be trading these next couple of weeks, because we're kind of waiting on this, this 5 week time period.
Yeah.
But there we go.
Yeah, and ultimately, if we just look at the Nasdaq as well, I was talking about this this bounce that we were seeing on the Nasdaq, and that's sort of what we were seeing on the crypto market. In the crypto market as well, we were seeing that slight relief bounce from the bottom that we established at $17,600 approximately. As of right now, we are seeing that pullback, which I mentioned in the crypto market when Bitcoin did break out of this rising wedge, and that's because we are seeing that pullback on the Nasdaq as well. So ultimately, I do think on the Nasdaq there is a possible chance we could come back down. If this negative news comes out, I think there is a possible chance that the Nasdaq can come back down and test this support level at the bottom of this falling wedge, which will ultimately, bring Bitcoin down to the second target that I have of this rising wedge, which is around $18,100. The first target this morning has in fact been hit. I did call a target of around $20,000. We did hit that just here. As of right now, we're seeing a little bit of a relief bounce. We are in sort of a support level as of right now. If I just zoom out a little bit, you can see that this orange resistance box here, previous resistance. So we can see lots of support here. We broke to the downside, used it as sort of a resistance area and slight consolidation. Then we broke above it, and we are now testing this as support as well. If we do break to the downside again, then I do anticipate, the price come back down to 18,000. But that's only if, we do see the Nasdaq pull back. And as of right now, we are seeing that, which is why this morning we have been getting, last night and this morning, we have been getting this pullback in the crypto market. Ethereum is exactly the same story. I told you about these two rising wedges, and on the Ethereum, this rising wedge here, we did break to the downside. We're seeing that pullback as of right now. The first target was hit around $1,100. The next target is around $940 down here. But as I said, that's only going to occur if we do see this pullback over on the Nasdaq. Also as well, just to update, I forgot your names, but I know yesterday you two people asked us to do some TA on CHZ. Like I said in yesterday's stream, I was expecting that rejection from this resistance up here. That's exactly what we're getting as of right now. And we are getting a slight relief bounce here, but I am expecting a bigger pullback if we do get more downside for Bitcoin, and the same with Ultra. I said we were coming into this major resistance level here. And if I just zoom out a little bit, I can show you why this is major resistance. So previously we used it as support, broke down below it, resistance, major resistance along here. We came pretty close to it here. But yeah, I told you that I was expecting a rejection from the resistance here. We did do that. We are now coming down into... If I just go down into the 4 hour, we are now finding support along this support level on Ultra as of right now. You can see lots of support along this level here. As of right now, we are holding that support. But again, if we do see more downside for Bitcoin, then we are most likely going to break down out of this support level here. And then, my first target is going to be 0.014. And then the next target will be at the bottom at 0.012. So yeah, that's just what I warned you about yesterday. I was expecting this pullback from the resistance. And that initially happened.
Yeah, it's worked out very well, hasn't it? Absolutely, perfectly stuck to those support and resistance levels there.
Yeah, respected them very well, and that's why I think if we do break to the downside here, pretty good short position if you were to short it, or if we broke to the upside, that would be a pretty good entry to get into. But of course, we do have to be careful because Bitcoin is so bearish at the moment. So I'd want to see some upwards momentum for Bitcoin if I was thinking to sort of long this position here.
Nice, very nice. Good. Okay, guys. So just to give you another quick recap, looking through the news that we're getting in. So talking about Jerome Powell and everything. So currently it's Tillis who is giving Mr. Tillis. He's kind of giving his testimony before Jerome Powell. So Jerome Powell will be on soon. But so everything I was going through earlier, that's just what is it that everyone is expecting, and what is it Tillis is saying. But it's going to be really, I think we're going to see most of the volatility once we have Jerome Powell kind of put out. So far we're kind of pricing in. I think that some of the massive drops we saw in the S&P, so the futures, or the S&P, sorry, just now was down by around 1%. It's now down 0.6. So reclaiming some of those losses that we've seen. Gold is up by 0.5%, which is quite interesting. Maybe a potential flight to safety. Have you got the chart of the the dollar? Can you bring up the dollar index here?
The DXY, yeah. So I was actually doing some TA on this morning actually, and there is a potential. So if I just recap you quickly, we are, if I zoom out a bit, we are at a major resistance level, and yeah. So this is we haven't seen highs since, when was this? All the way back in 2002. We haven't been this high on the DXY since around 2002. And we are in this major resistance level here. I am expecting to see a rejection here, but there is always that possibility we can break above the resistance. But I was doing some TA this morning on the DXY. So if I zoom into the hourly, take a closer look. I think it was a 4 hour actually. There we go, the 4 hour. You can see that we are currently testing, as of right now, a major support level. So lots of support along this bottom blue line here. We are, as of right now, breaking towards the downside, but there is lots of resistance up here as well. You can see that we did get rejected here. And yeah, we're getting that initial pullback. If we do break to the downside here, I am expecting some price action I'm expecting the DXY to pull back and sort of hit the target around $103, then looking at $102, and then maybe all the way at the bottom at $101.
Very good. Just to give you, so another thing that will kind of affect this dollar strength, let me just kind of add it onto the screen here. So a couple of the fundamental things that are going to kind of affect you this week. So what to watch, this is from Bloomberg. So this is, like we said, Fed Chair Jerome Powell, his semi-annual Senate testimony. This is on Wednesday, today, coming up in about 10 minutes here. The US House testimony on Thursday, initial jobless claims coming up on Thursday. PMIs for Eurozone will have some effect, but not a huge amount. And then consumer sentiment, that's going to be quite big on Friday. And this is just an overview. Okay, so we have Jerome Powell now talking. So he's saying he's very strongly committed to bringing inflation down and moving expeditiously. And they have the tools and the resolve, but the question is, there's a lot of vagueness here, a lot of I guess you don't really know exactly what he's saying. So, we have to bring inflation down, and this is going to benefit everybody. We're going to review the current economic status before we come up with a new inflation rate. Everything's going to be done week by week. The aim is 2%, but I think they are now aiming for around 3%. So this is there's a lot of what he's saying and what he hasn't said in between. So I believe this is so he's basically saying a lot of not saying anything. But let's bring up a chart of, let's say, S&P 500. Actually, could we go for the Nasdaq, AJ, and see how it reacts, if it reacts in live, live time
on the screen right now. We are seeing a slight. Shall I go into the smaller time frame? Let's have a look. So we are seeing a little bit of a
hour. Let's go on to the 15-minute.
15, 5 minutes for 5. Let's go on 5 minute then.
Okay.
Let's see how this plays out.
Yes.
W pattern here. Broke to the upside.
Yeah, that's very nice.
See how that plays out. Let me know in the comments as well if there's any other coins that you want me to do some TA on. I'll see if I can do that for you quickly as well.
Yeah. Because I feel as though, so he's obviously, I can't really show you guys too much because this is obviously YouTube will come and they'll take it down if we show the full thing that I'm watching, because it's on a paid platform, so it's Bloomberg, which you have to pay for. So I can't stream it to you directly, otherwise YouTube will come and they take us down and probably call us a whole load of bad words. But I can still tell you everything that's happening. Harvest Finance.
Harvest Finance. What's the ticker for that?
So now Harvest. I mean, it sounds like a yield farming. Which, mate, it's farm. FARM.
Okay.
Let's have a look at this.
What do you think about a Google user as well? I think Bitcoin can go to 200K this year. What do you think about
that? 200K, I think, is not at the end of this year. I don't think so. I do definitely think within the next cycle. But, I'm going to say probably not, definitely not at the end of this year. We're too much, we need to get inflation under control. We need to, accept that we're going to have mass unemployment in the US. And that's going to kind of have a big pressure on the whole markets. So, everyone's worried about a recession. So I don't think just saying Bitcoin could go to 200,000, not as of yet, not by the end of this year. Absolutely. This cycle. I definitely believe that, maybe top out somewhere like 180 or something like this. But yeah, that's my opinion. I could be wrong here. I bloody hope I am. I'm sure everybody here hopes that they are wrong.
I think we can all agree here that, we are in a bear market, and looking at past bear markets, we have seen, over 80% pullbacks, and we haven't had that 80% pullback yet. And it does, take a very long time for the price to recover as well. So I think, it's not impossible to hit 200K this year, but if we're talking about it realistically, then I think that we are going to, do what we did in the past bear cycles, and sort of stick to that, time frame that we did. Recover in, and I'll show that in a second. But I'll just quickly have a look at farm. Right now we are
just to give you an overview quickly, guys, of exactly how it describes itself. And you can trade it on Binance, Femex. Use the links down below if you want to join Bybit or Femex and get up to $4,500 for free as a bonus when you sign up using our links, if you want to do that. But just quickly, guys, Harvest is described as kind of automatically allows you to automatically farm the highest yield available from the newest DeFi protocols and optimizes the yield that are received using the latest farming technologies. Farm is the governance token for Harvest. It is claimed that farm holders can vote on proposals for the farm operational treasury and receive the 5% fee from Harvest operations. And that's kind of exactly how they market themselves. Let's have a look at some of the technicals. I don't know. I'll have a look and see what the numbers are in terms of how much you can get, and I'll explain a bit after as to how this works. But let's have a look at the technicals if you've got anything on there.
Yes, it's sort of in a bit of a no man's land as of right now. We don't really have any major support sort of below us. You can see that we have sort of bounced off this trend line here. As you can see, we are bouncing as of right now. Previous support along this level, lots of support. Ever since it was released. I think this is on Binance. Yeah, ever since it was released on Binance, we've been respecting this support level very, very well, and we are still respecting this support level here. We are seeing that nice bounce. So I think around this downwards trending blue line here, anywhere along here is sort of a pretty good entry point. If we were to zoom in just a little bit more, then we can see a shorter time resistance level. You can see lots of resistance along this trend line here. So if we did break above here, then that could also be a pretty good buying opportunity. And I'd expect to see some price action towards the upside, then a potential, potentially use this as support, and then see some more price action towards the upside coming up. Look, I'm looking at this level as of right now. This looks like a pretty good previous support level, which is also going to act as resistance if we were to come up to it. But we have to be. You have to take into account what the market, the whole crypto market sentiment is as of right now, and it is pretty bearish. So, seeing the break to the upside of this resistance level here is pretty unlikely for me. If we were to come up and test it again, I would expect another rejection. And if we did see more downside for Bitcoin, then the likelihood of it is that we would come down to this support level here, which, personally, looking at this chart, would be a very, very good buying opportunity, because we've never actually dipped below. Well, we've had the wick below it, but we've never actually broken below this level. So for me, that would be a very good entry point. But I would just wait until we came back down and tested this blue support level here.
Very good. I was like, where am I looking? Wait, over here. Okay, Harvest Finance. Just to guys, give you an overview as to how this works. It's very similar to Celsius and BlockFi and all these crypto lending platforms. Basically, you give them your money, they give you a guaranteed yield on your crypto. But the way in which they do that is they lend it out, they stake it, they do whatever, and they basically take all of the risk in making sure that they get a bit of return. Then they pay to you. Now, as long as they keep getting that return from the market, they can keep guaranteeing you a payment. But if they can't, then obviously you end up with an insolvency issue. Now, I don't know. Like I said, I've only just kind of jumped on here and had a look through Harvest Finance. But, they're very big with Lido, Curve, Polygon Network, obviously a few other ones. But there are very close similarities to what we're seeing with Celsius, etc. So I would say do a lot of research and do your own research with regards to kind of what they offer and some of the liquidity available before investing in them.
Yeah.
I think is the kind of the key takeaway. Do you own any Monero? I don't own Monero. I quite like it, but I think as crypto becomes more like universal, there's going to be, kind of a want to have more transparent blockchains, because like the whole appeal to Bitcoin was that it was very like people, you didn't know the wallet users. Now there's, so many different ways of tracking this, etc. Now Monero is like a more private version of Bitcoin, and you can send crypto in a very, very secure way, which is obviously great if you're like the people who wanted to use crypto in the beginning because of the dark web, all of this type of like bad stuff, that the reason why people hate this. But I've just seen a comment here.
Yeah.
Absolute madness. But yeah, so basically I don't own any Monero. I think it is quite good. I believe you can mine it. I think there's always going to be a need for more privatization and decentralization, and I think that will have some kind of appeal. But I think in terms of the other projects that I think will gain more popularity, I'd be more inclined to go for them.
Yeah, and I'll just open up the chart, and I do actually have some TA on it. I was looking at this sort of channel a while back, and resistance along this level, previous resistance along the now support level. Lots of support here. We're just above that level as of right now. We are seeing a slight bounce off of this level. So if we can continue to hold this support level here, then I think that'll be pretty good entry for it. And then I'd be looking at the price. Only if, we sort of see the price of Bitcoin have that relief rally, which I've been expecting, then yes, most definitely the price could come up and test the resistance at the top of the channel here.
Yeah. Okay, guys, just to give you a quick update.
The price is pumping, actually. Bitcoin.
Yeah, right. So, guys, what asset is that?
Bitcoin's pumping.
Bitcoin pumping. So
go on to the 5 minute.
Yes. So we also have the yields. The yields are coming down on bonds, which I'm kind of surprised that Bitcoin is pumping. Maybe it's being seen as like a bit of a hedge. But the overview as to what's been said so far, guys. Let me just kind of bring this right the way to the beginning. So we had actually before the meeting, Larry Summers was talking about a Paul Volcker. Paul Volcker is basically where you increase. It's a guy. He did this when he was chair. He just raised interest rates above the level of inflation. Obviously, that kind of brought it down, but he kind of sustained it for a few years, which is absolutely crazy. Went to like 19%. That was crazy. But yeah, so basically meeting by meeting handling of rates. So he's just, he's going to say, look, we don't know. There is the potential for more surprise interest rate hikes. Now, 0.75 basis points, 75 basis points or 0.75% was actually seen as a surprise. So he hasn't said, oh, okay, that's not going to happen. I think the reason why it's pumping, as we saw earlier, we did have a bit of a, what was it? Let me bring it up on the old screeneroo here. Boom. Economic calendar. Nope, the rate hike monitor. Let's just refresh this. See if anything has changes. Oh, my thing just doesn't want to work with investing. I am kind of streaming a lot of things at the moment, though. But just to go through a little bit more, so 3% inflation is kind of expected. So usually try and keep it between 2 and 3. So they're going to go for that higher band of around 3%. They're expecting unemployment to stay very, very high. Well, I'd say relatively high, like 4% is what they're kind of aiming for. A lot of people in the market, the kind of analysts, are currently trying to price in 4% inflation, which again goes in favor with what they think that the Fed has got it wrong at 3%. So they're trying to price in 4%, so that they end up like kind of okay by the end of the year. And that's why if the Fed are doing something right and the market is actually wrong, we should end up with 3% inflation by the end of the year. And then therefore, because we priced in 4% and actually it's less, that gives us room for a rally in the markets. Now, he got questioned by Janet Yellen. Elizabeth Warren, saying, look, are gas prices going to go down because of your interest rate hikes? No. Is the price of groceries, which is up by 12%, going to go down as a result of your interest rate hikes? And he said no. So obviously, he's now getting grilled. by another guy, Richard Selby, from Alabama, saying, look, you still have messed up. You haven't got inflation under control. And so what can we expect in the future from you? And he's about to answer this now. But yeah, more surprises are expected to come as a result of this crazy high inflation. And I guess people don't really believe. Generally, across the board, we see, if you have a quick look at the S&P and the NASDAQ, we're seeing a little bit of a jump, aren't we? I believe.
Yes. Let me just bring that on screen. So S&P, we're having a slight jump in price. If I zoom in a little bit as well. Seeing a little bit of an increase in price. NASDAQ as well. What's that? Oh, that's on the 5 minute. Yeah, we're seeing a pretty nice increase.
Yeah.
Slight pullback in a very short time, but yeah.
So this,
Lots
I think,
of volume.
is... Yeah, so I mean, you know, Jerome Powell, I think what he's saying is he's saying the right things, and this is inspiring a bit of confidence in the market, hence why we're kind of having this pump when he was talking. Yeah. But now he's getting grilled quite heavily, and I think people are watching this, you know, like right now, and you know, he's getting very heavily
put under pressure.
I'm gonna say shocking. Yeah. The questions are just really horrible. Like, you know, is this going to have any positive benefit on the American people? And he's like, well, you know, no, but kind of, because the Fed kind of looks at core inflation, you know, whereas everybody else, and especially the president, he looks at, you know, like what's the final print. So it's not the core, it's what's the CPI, and everyone looks at that. Core inflation is always much less than CPI, because the CPI includes things like energy and food, and obviously those are the two of the highest things because of Russia, because of, you know, well, there's firstly that, there's also then, I guess, the OPEC not wanting to increase the amount to which they pump and that they sell each day, so they're kind of keeping very kind of stuck. And then also we're currently burning through the US reserves. So that's then kind of an anticipation that, well, if everyone's using their reserves right now, in the future, we're still going to have, you know, sustained higher oil prices. I guess the only saving grace is that we're going to have, you know, it's the end of the summer. So as the gas continues to get cut off from Russia to Europe, it's not going to have as much of an issue because it's not going to be used for heating. But there's still a whole load of industry that needs to use Russian gas and oil, in fact. But yeah, that's kind of the overview. And I think the Bank of America are expecting a higher price of oil, which obviously will apply to petrol, and that will affect the CPI. And so that will kind of keep us at those higher levels of CPI, which obviously is going to weigh negatively on the markets itself. But Powell has said we must restore price stability, and we will. So he's going to, you know, he's saying he's going to do this. And I think after these meetings, we're going to see a bit more of a harsh response. So I would personally, I'm thinking that definitely a 50 basis point hike coming up in July. I'm going to say definitely like a 50 basis point hike. And so, yeah, I think a 75, maybe not, but I'm going to say I think a 50, definitely a 50 in my mind. And we're kind of seeing this sentiment change here. Like I said, we'll go through this very soon. But yeah, that's kind of where I'm currently at. The upper limit here is 1.75. So the upper limit here is 2.25. That's the 50. That's the 75 there, basis point hike. So let me just,
you know, add your screen.
Oh, yeah, that's okay. So that's what we're seeing there here. So NASDAQ on the run. Let's have a quick look at the old Nazi.
NASDAQ, yep. Yeah, we are on a run. Coming into some
that is very
slight
nice.
resistance up here. But we'll see how that goes. I was actually in a slight long position this morning on Bitcoin. Unfortunately, where did I long it from? I longed it from $20,330, and I had a 1% stop loss, and it got stopped out by 0.1%. So it's a bit annoying. Oh well.
Oh well. Oh well. And also, guys, another thing that's quite, I guess, relatively interesting is keep an eye on bond yields. I know it's absolutely boring. Like with crypto traders, I want to see a bloody 75% gain in one day. You know, anything less is absolutely not worth it. So if someone says they can give me a 3% return over, over the year, we all just think, go away. Like, I want adrenaline poured straight into my brain. I don't want to have anything safe. And that is one of the issue with us crypto traders.
Yeah.
But we are now seeing a bit of a correlation again, which has always been the case, a correlation between bond yields and the price of the general traditional markets. And I think, I've always kind of said, and I think it's pretty similar. In fact, bring up Bitcoin, see if that's also on a bit of a run, because obviously the NASDAQ is.
Yeah.
There is a bit of a delay, but let's have a look at Bitcoin and see if we do see something.
On the 5 minute, yeah, we are still.
Yeah, I mean that looks very similar. To be fair,
We're very similar. Yeah, we are.
Yeah.
We are correlated with it very well. We had this slight pullback here, and now we're having the pump. We've seen that exact thing.
Yeah, and then a little bit, that little bit of indecision there, halfway up, and that, okay, so still very, very, very correlated, and that's why I think we need to keep an eye on the traditional markets, which obviously we try and do, and one of the key things, to look at is in fact the bond yields, because as the bond yield goes. So the yield goes up, that means the price goes down, and the price goes down because everybody's selling them. So if the yield goes up, usually everybody's buying stocks. And then as stock prices begin to fall, everyone buys bonds. So that means that the yield then goes down. So it's kind of like self-balancing. So as the yield goes up, the price goes down. I'll do a full video, I think, if anyone is interested, on how that has an effect, because these big institutions, they don't, they're not degens. They don't buy a whole load of crypto. They don't buy just a whole load of Tesla stock and kind of hope that it goes up, unless you're Cathie Wood, for example. Which one thing is actually really weird. Like her, do you know the name of her thing? Her Cathie Wood. I can't remember it. Cathie Wood hedge fund. It's had like the most amount of money inflow consistently. Cathie Wood, co-founder, ARK Invest, ARK. Yeah. So she's like, kind of head honcho over there. And yeah, they've had crazy amount of inflows, even though they're down. So ARK Invest return. Year-to-date return. Let me have a look at this. So they're currently down something crazy, like I want to say like 50 or 70%. Like even just year-to-date. Yeah, well, okay, that's absolutely awful. What's the performance? Yeah, so the performance is 57% year-to-date, which they're negative. It's absolutely insane, but they've had the most amount of consistent inflows every single month over the past, I think it's like a 1-year period. But yeah, she's obviously like she's a perma bull for Tesla and the crypto, I should say. Yeah, Brucey, there you go. Thank you, mate. ARK Invest. But yeah, so we can have a look through this. But yeah, obviously I can't show you directly what is happening on the Bloomberg portal. Yeah. And he's saying, so another thing that Jerome Powell has said is US economy is very competitive. Some sectors look less so. Let's bring this up. Here we go. Bloomberg. Let's go. See what the headlines are saying. And whenever there's any kind of like major event guide, I definitely recommend that you guys do this. I mean, actually just watch what's going on. Come join our little streams that we do. But yeah, so Powell sees ongoing Fed rate hikes needed to tame hot inflation. Obviously, this is going to be, different people talking about their different opinions and the way they interpret it. But again, it's kind of similar. So Fed rate hikes needed to tame hot inflation. A bit of a pump because everyone believes that Jerome Powell knows what he's doing. But then also we might then have a bit of a dump. I'm kind of anticipating maybe later on today or tomorrow as it kind of sets in. Because if we have a look as to what happened, can you bring up or even Bitcoin on Friday? of last week, I believe it was, AJ.
Bitcoin Friday last week. Yes.
Yeah, Friday last week. Maybe go into like the hourly or something like this.
Yeah.
Because we had the same thing where they raised the interest rate by 75 basis points. And this was very, very positive for the market because they were like, oh, damn right. Like, this guy knows what he's doing. Now he's actually being a man and, you know, doing what's needed to bring that inflation level down. But as a result, you know, everyone then afterwards was like, wait, well, hang on, what does he know that we don't? Are we going to be in a recession? And that's why now there's so many, you know, big recession fears. But having a look.
What time? So the 17th, that was a Friday, I'm pretty sure. Check it.
Was it?
Yeah, 17th. Friday was the 17th. Yeah. What time did it come out?
I went live, didn't I? I think it was like 10 p.m. or something. Yes, yeah. 10 p.m. my time, so 7 p.m. your time.
Okay. So PM, not AM. Yeah, so we saw a pretty substantial pullback from 7 p.m.
Yeah, so I believe this little pump here on the left. What's that? Is that 7? Is that 7 a.m.?
17th at 7 p.m. You know, we sort of found the top around that area, and then we had a near 4% pullback.
Yeah. Okay. So yeah, then we had that massive hike, and you guys obviously saw it in the thing where we had the small hike, but then we had a massive drop in the price of Bitcoin. And then we had a massive drop because everyone was worried about inflation fears. So I think what we're kind of seeing is something similar now, where there's a little bit of that pump where everyone's like, okay, well, maybe they know what they're doing. But there's still things that he hasn't really said, where he's left out. He's just kind of spoken in between the lines, where he said, you know, yes, there's going to be a need for more interest rate hikes. You know, we're not going to, you know, we will do whatever's needed. And so that could then be a higher interest rate hike. And he said, look, we're going to take it by case. So he doesn't want to give us that thought that, hang on, actually, he is giving us a number, because then, you know, the market could potentially worry. So we might see a bit of a crash. So be careful, set some orders. If you want to hedge yourself in terms of if you're actually actively trading, you might want to hedge that. So keep that in mind, you know. But we are currently, if we bounce above this, we're still kind of seeing on this. Yeah, on this like short term, there is a, you know, kind of higher highs, a little bit of a, you know, a bounce back, a bit of a trend, move up to that white line.
Yes, yeah. So this white line here, that's actually quite an important line as of right now. So that's the that is the bearish divergence, which I showed you yesterday. We got rejected from there, and we saw that initial pullback. This is going to act as, you know, pretty strong resistance. You know, we've used it as resistance 3 times previously. So yeah, there's a high chance that we could come up to this resistance level here. Potentially, you know, seeing a slight pullback, and maybe if we do break this resistance here, I do expect to see a lot more downside. But as of right now, we just have to wait and see if we do come and test this resistance level up here.
Nice. Okay.
But yeah, we're still seeing the price increase.
Yep, that is good. That is very good. I want to show you this here. So one thing that we're saying is that by year end, this is by Powell, by year end, rates will be near Taylor rule iterations. Now I'll show you what Taylor rule iterations are. So the Taylor rule, sometimes referred to as the Taylor's rule or Taylor principle, is an why is it so late in the day? Econometric model that describes the relationship between Federal Reserve operating targets and the rates of inflation and gross domestic product growth. Because this is one thing to consider, guys. You know, the more that we tighten and kind of squeeze the economy, like put it back into a box that we can control and there's not mad inflation, that means GDP will go down. It's going to be less spending by businesses, more unemployment, and obviously that's bad for GDP. And potentially also bad for the dollar itself. So expect that to be the case, you know, over the next coming few months. But at the moment, you know, when we're looking at the alternatives, you know, inflation in the UK today hit 9.1%, which is absolutely insane. So people are not going to be buying, you know, UK-based assets because, you know, there's so much inflation there. So where else are you going to go? The Eurozone has only just begun to tailor off their bond buying and actually, you know, increased rate hikes for the first time since 2011. So they're still massively behind wherever the Fed is. And it could be argued they don't need to do as much, but Europe's not looking great. So people are going to be buying US treasuries, usually US bonds and stuff like this. So that's going to keep the dollar relatively strong. That's why we're seeing a big rally in the dollar, because that's kind of the safest thing to buy. Anyway, just went on a little detour there. Taylor rule has been interpreted both as a way to forecast Fed monetary policy as a fixed rule policy to guide monetary policy in response to changes in economic conditions. It's basically a formula that relates the Fed's operating target for short-term interest rate to two factors: the deviation between, it's kind of long actually. This is basically but I'm not going to get into this, to be honest. Basically, we're looking for a GDP to be around about that 2% level. Now, that means that, hopefully we don't continue to go below that. But ultimately, yeah, we're basically kind of good news if they can do this, but it's not guaranteed that they can do this. Let's have a look from Esteban. Bitcoin today, 21,300. The next hours, at least if we go to 22,700. Is that 27,000?
Unless they're talking about Ethereum, but that's a bit far. No, I think probably 27,000.
Oh, 22,000. Yeah, 22,700.
I'm not too sure there, but
22,700 would be good, but we'd have to break above this. You're on the Bitcoin, so we would have to break above this. We'd have to break above this white line that you have, that kind of downward trend line, or in fact maybe.
For me to flip bullish, sort of in the shorter term for Bitcoin, we'll have to break above this white line here and use it as support. And we also need to break this sort of, if we're looking at the shorter time frame, we have some slight resistance at, around that area of 21,300 that Esteban did mention. So the $21,300 level is around this level here. If we can break this, we found previous resistance here and we have been rejected. So that is a level that we would have to break. And if we can hold this level here, then there's a pretty high chance that, we could come and test that $1,300 level, which would take us up to this white line. But then I would expect to see, let me just see what the indicator's saying. I would expect to see a rejection from that level. Yeah, there is room to see more upside. But yeah, I don't expect to see that price breakthrough there. There is a possibility though. If we were to break above it and then we broke above this orange box here, which is more relatable on the 1 hour, then I think, the next target we're looking at is sort of the $22,600 and $23,000 level. That's what I'll be looking at for it next, where, again, we've got strong resistance up at those levels as well. But today, I don't expect to see the price break above this white line. As I said, I think we will see another rejection there. But yeah, that's it for that. And Aussie, $15,800, your target for Bitcoin. Yes, I think my target is around $15,500. If we do continue to see more price action towards the downside, if you're not familiar with this chart, the CVDD, it just has indicated, the bottom every single bear market. So 2011, it signaled it, 2015 and 2018 signaled the bottom for every single bear market. So I am expecting the price to come down there. That brings us on to our portfolios. As of right now, we're sat in. So we started this portfolio off with 5,000. We started this portfolio off with 500. As of right now, the $500 portfolio is in $51 profit. And the $5,000 portfolio is in $342 $341 now dollars profit as of right now. So this is good for as of right now, but I don't expect these portfolios to stay in profit. I do think that we are going to see a little bit of a loss in them, and then they hit our next buy orders. We do have some more buy orders at 17,000, 16,000, and then the very last buy order is at $15,500, which is the bottom for me for Bitcoin. If I just bring that up again here, $15,500 is a bottom. So we have a buy order there, and that buy order is a little bit got a little bit more USD than the others do, because we sort of want to we want to have bigger buy orders at these lower prices to sort of dollar cost average that average price down as much as possible. And then, of course, there is a possibility that we could see, more downside from $15,500. This is just a sort of rough estimate as of right now, because, this CVDD does tend to move slightly, but we do have that $1,000 cash reserve on the $5,000 portfolio, and on the $500 portfolio, I think it's near $200 as a cash reserve. If we do, break below that target, that I think is sort of the bottom area for Bitcoin. So yeah, $15,800, pretty realistic target, I think.
Sorry, I was just listening here. Jerome Powell was someone was trying to grill him from Nevada, the senator. She was saying she was going, but with the fact that these guys are keeping oil prices high, that's affecting people in my area. Can you not, do you not take that into consideration? And he was like, well, that's not really my job. And she was like, yeah, but surely you take that into consideration. He's like, well, what do you mean? Like my job is price stability and employment numbers. He was like, I don't get involved in company structure. Like, it's not really my job to do that. And she kept trying to pressure him. That kind of kept me amused. But overall, the kind of final little update that we're seeing, if you bring up the NASDAQ,
yes,
AJ, we can see that's on a bit of a rally. That's up.
Still
that's
going.
Up
Jesus
fairly
Christ.
significantly, actually. And I think that is based on some of the positive news, that it seems as though he's kind of handling these questions very well. And so people are having a bit of confidence in the Fed now, just, on the way in which people are speaking, the questions that are being asked, and the way in which he's responding. I think the market sentiment is that he does kind of know roughly what he's doing. Obviously, he's the Fed, he's the chair of the Fed. He's never going to give a straight answer directly, but he's giving quite a good one in terms of, pointing out exactly, he knows where the issues are, such as, with petrol, with the price of gas, essentially, all this type of stuff. That is largely out of his control. OPEC are the one managing that, and obviously we have the issue with everything in Russia and the supply being cut, and also now a very high demand for this, because industries or countries like China, which have massive industries, are now getting over some of the worst of the COVID. And so then people are back to work, people are making stuff again. And as a result, you're going to need more oil. So we're seeing a lot more of that demand coming up, and also a very limited supply. Firstly, because OPEC don't want to, and secondly, because Russia are now also, kind of restricting that as well. So those are kind of two of the major issues. But we can see that the NASDAQ's kind of coming up, and overall, I think this is fairly positive. I'll be interested to see tomorrow or later on as the days go by, if this is just a bit of a trap for us.
Yeah.
I do think we're going to see a pullback, because this is quite a lot of price action to the upside.
Yeah.
We're going to see that little pullback, but I'm just kind of curious as to how high that might go.
Yeah, it'll be very interesting to see. And just to add on to what Esteban said, a nice bull trap. I think that is something that could be very likely for Bitcoin. We are very, very oversold on all of these momentum indicators. The RSI, we are sort of the lowest. I can't remember when we were this low. On this chart here, it doesn't even go back. Oh, it does. I don't think we've ever been this low on the RSI. So, we are incredibly, incredibly oversold. I do still have that target of $15,500, but I think in the shorter term, we're going to see a sort of a relief rally, because we are seeing, as of right now, we are bouncing off that 2017 previous all-time high. I think a sort of bull trap is something that we need before we can see some price action towards the downside, because we are so oversold. So what I would like to see is some price action towards the upside, sort of getting all those people, thinking, oh look, we're back on the bull train, and then the indicators, can sort of come back and sort of reset slightly before we then see more downside to my intended target around $15,500. So yeah, I think very likely a bull trap is something that is very likely to happen. And for Ethereum, where would Ethereum? So I did actually mention this previously. I think so. As of right now, we are at a very important support level on the daily. But if we take a look at the weekly, my bottom for Bitcoin, for Ethereum, if when Bitcoin bottoms, if we do break this support level here on Ethereum, then for me the bottom is around between $700 and $800 for Ethereum. I think that's where the bottom is going to be. We do have some buy orders at $800. So we had a buy order at $1,000 and $900. Those were both hit. And we now have another buy order at $800. If we break below that, we have a little bit more cash reserve. If we do, break below that, so we can dollar cost average that average entry point in even lower. So yeah, that's where I think the price of Ethereum would be sitting when Bitcoin bottoms out.
Yeah, no, I would agree with you too. Yeah, I agree. I think realistically, we're kind of looking at those. We're looking at either the previous high from the years before, i.e. like 2017 or something like that, or we're looking at kind of the next level of support that we're seeing there. So in this case, obviously it's like 800.
That 2017 all-time high. So yeah,
but I think across the board for a lot. A lot of the crypto, just any of the altcoins, I think will probably, and usually obviously all the altcoins fall further. So I'm going to say it's, kind of usually because everyone's going to be holding different coins, in addition to Bitcoin. But, I would say look for the 2017 high, and then also, so it's going to be there. And where's the next level of support underneath that? And I think that's kind of where we're going to see that key level of support for a lot, obviously Ethereum, for example, that's 850.
Yeah. I think we might see a slight reversal, because we are seeing, if we have a look at the NASDAQ, we are seeing the volume sort of decrease, and that indicates to me that we might see a slight pullback.
That buying volume's being because that's not a bad trade, is it? That's what, is that a percentage point? So if you draw if let's say you got into a trade at the bottom of this big pump, here.
Well, from the very bottom or from the
volume? Go from there. See what we're at.
So it's a 2.12% move.
Yeah, very nice. And so there is going to be this selling pressure will obviously take over. Once people begin to take profits, and we're going to see the same on Bitcoin. Obviously, the question is just how far do we run before we see this kind of massive pullback? Well, not massive pullback, but just a bit of profit taking. But obviously, we have to keep an eye on all the key levels of support and resistance. And if we kind of stick to those, we might be breaking through an area of support, just like we have here. If you go back a little bit. Zoom out. So here, that might now act as a bit of a level of support if we do come down to the downside.
Yeah, if we can get a little bit higher, pull back, and that support, that would be great, because then we can see more price action towards the upside. That'll be nice if I just draw that out for you. So yeah, if we see more price action towards the upside, get to that pullback, find support there, and then I think we could go even higher. That would be bullish for Bitcoin as well. Because you can see that the NASDAQ is pumping, and as a result of that, Bitcoin is pumping as well. I'm really annoyed now that my long position this morning got stopped out. It got stopped out by literally 0.1%. If I just had it 0.2% more, then it wouldn't have been stopped out, and it would have been a nice trade. But
Yeah, it would have been. It's very good. Everyone who's gone long right now is actually doing, doing really well.
Yeah.
But yeah,
I'll
guys,
try
I
to play
think
it a little bit safer this morning. I'll just put a 1% stop loss. I don't know why. I should have just done 5%.
yeah.
Oh well, better be safe.
So, guys, what we'll do is I want to come on here tomorrow. I'll go through kind of what the overview of the effect has been. Obviously, I know there's not really too much being said. We've kind of had his conversation, Jerome Powell. So just to kind of recap this, he said they're going to manage the meeting by meeting. They're going to handle the rates then. They say, looking at kind of 3%. Maybe to the upper limit of 3% for the next 3 years. Also, during that period, unemployment will increase from currently 3.7 by the end of this year, 3.9 by the end of 2023, and 4.1 by 2024. And unemployment obviously means less hiring for companies, less GDP, and that's kind of good for inflation. So that should bring it down. But a lot of people were kind of pricing in around 4% inflation, which I think now that's because people were worried that the Fed didn't know what they're doing. Now it kind of looks like they are. So I think we're seeing that kind of relief rally. But obviously the overall sentiment is that we are in we are still in a bear market. So keep that in mind. Don't go crazy and just think, okay, well, I have to get in now. But anyway, gas prices won't go down as a result of the interest rate hikes. Food prices won't. So yes, core inflation might go down because that's the only thing that the Fed can manage is the core inflation. But two of the highest additions to inflation are the only two that are included in the CPI and not the core. So the consumer price index includes everything in the core plus gas and food. So it's like energy, so it's like petrol and stuff like this. So energy and food. So those, we still might see high CPI. And if we see a high CPI print, then we will have a, still a very worried market. So earlier on, Larry Summers, who's one of the Fed presidents, he was talking about a potential Paul Volckering. I think everyone's kind of moved away from that. We're not expecting that. Jerome Powell, though, has said there are more surprises in terms of the interest rate hikes. So watch that out. We could be looking for a 75 basis point hike, but kind of at the moment, we're looking at a 50 basis point hike being priced into the market. And we can see that. I'll keep you up to date with that. But yeah, everyone kind of agrees that we're currently below the unemployment expectation. And that's the overview of what we're hearing out of the Fed currently.
Yeah,
there we
I've
go.
Just spotted a nice little trade for us, not confirmed yet. So if we just take a look at this, so we have this head and shoulders pattern that I'm sure you just see me draw here. We do have this level of resistance that we have broken above. So if we have a look at this, we have used it as support previously, and then we've used it as that resistance for the shoulders and the head. Right. So we have actually broken to the upside, but I wouldn't have traded this because if we have a look at the indicators, we are very, very oversold on all the indicators. So what I'll be looking for here is if we can get a slight pullback back to this previous resistance, which will now act as support. And if we can bounce off this level here, then I'll open up a long position. The price target would be approximately $21,300. So I will be keeping an eye out for this. As I said, the indicators, the RSI, very, very oversold. The stochastic RSI oversold, CCI oversold, and the stochastic is very, very oversold. So I'll be expecting to see a little bit of a pullback if we can hold the support and we do bounce off of this level of support here. Then I will be opening up a nice long position. I'll keep you updated with that as well.
There we go. So, guys, make sure you subscribe to the channel. Check in with us tomorrow. We'll give you another update looking at the technicals, how they pan out, and then also what's going on fundamentally. And we'll see if this pump continues in the risky asset category, i.e. the NASDAQ, and also in the crypto assets itself. Yeah. But it looks like it could be good. I'm not going to say that we found the bottom. I still think obviously we're in a bear market, but I think the longer that we begin to accumulate and stabilize above that 19K level gives me more confidence that, you know, we're closer to getting out of this than we are just beginning.
Yeah,
You know,
and
personally.
it's really good that we are holding the support at the previous 2017 all-time high. You know, I think for a lot of people, they've got, you know, their buy orders at that previous 2017 all-time high, which is why, as of right now, I think we are continuing to hold that level. I know we did dip below it, but we did get that candle hold above it. But you know, still we haven't seen the percentage decrease that we normally see in a bear market. You know, normally it's over 80%. You know, I think the previous ones were 83% and then 86%. So I would still, as of right now, we have, what's the pullback being?
What, we like 60, 70%?
75%.
75.
And yeah, so I would still be expecting to see over 80% pullback from the all-time high.
Yeah.
So yeah, that would bring us down to that $15,000 level, which is sort of still my bottom for Bitcoin. So we will wait and see if we can hold this previous 2017 all-time high, or if we will break it, which I do expect. I do think we're going to break it, because personally my target is that $15,500 target. But yeah, we'll see.
There we go. Well, guys, subscribe to the channel and make sure that you tune in tomorrow. Thank you all for watching. Hope you have a good understanding as to what's going on. And obviously, whenever things like this happen, we have to make sure that we are aware, because that's what affects the general crypto markets as well.
Yeah. And make sure you head over to Twitter. Give our Twitter a follow. The link is in the description, or there is the banner on the screen right below. I will be keeping you updated on that potential trade. So I'll keep you updated over on Twitter. If I do go live, I'll let you know if I'm going to go live over on Twitter. And then, yeah, we'll see if we can make a little bit of cash from this.
Let's go. I'm ready for it. All right, guys. Thank you very much. See you tomorrow.